So thanks so much to Professor Yen, who brought us a lot of important ideas. The first might be the coherence of the movement. The fact that most of the protesters seem to agree both with the tactics and the objectives. One of the striking things, of course, is as the protests have continued and the bill disappears as an issue, what becomes the issue? Core reform, universal suffrage, that kind of demand. And that speaks to a dissatisfaction with accountability and transparency. Now, one of the things that we get from Professor Yen's research that's also very interesting is the importance of the umbrella movement, right, as the first movement for some of these folks to join. But one of the things that we see is all of these movements become easier to trigger. And so society, in many ways, becomes less stable as a consequence of this, that the triggers could be smaller, and that even removing the trigger doesn't end the protest. Well, we're coming back here to Los Angeles for our next presenter, Professor Robert Koepp, who is making a return to USC. He taught at the USC Marshall School of Business some years ago and is back on campus. We're delighted about that. He's a graduate of Pomona College, so he's got these local credibility, but he is based in Hong Kong, where he is the director and chief economist for the corporate network of the Economist Intelligence Unit, which is part of that Economist umbrella. He has worked for other organizations as a consultant, as an economist, Milken Institute, and others. But he has been writing quite prolifically. He's the author of a couple of books, one looking at the arrival of Chinese companies on U.S. stock exchanges, attracting global capital. But he's also been he's written a book on clusters of creativity, looking at Silicon Valley, Europe, and beyond. He's been involved with surveys, not of this type, but he is one of the authors of the Economist's Asian Business Outlook survey each year.
I'd say everything that I'm about to remark on, take in context. You've heard some people who are born and raised in Hong Kong, even with Fiona being here now amongst us in Southern California, having Hong Kong roots. I've been in Hong Kong 3 years, but I've been about 20 years in Asia, and before Hong Kong was 10 years in Beijing. So I have some of those insights to bring from just a more general perspective. And indeed, what we do at the Economist Intelligence Unit, unlike the people that we've been hearing from who are really looking at kind of the motivations and what's going on, while we do consider that, we're very focused on understanding, okay, what's next in terms of economics and policy. So from that dimension, I've just got a few slides here to share with you, and then I'll try to be brief so we can get on to the Q&A and panel discussion. But, well, okay. So first of all, the headline figure that used for measuring economies, gross domestic product, GDP, Hong Kong is really slowing down, and it might actually stagnate. So our latest prediction, and this was downgraded, having been downgraded before just a couple months ago. So last year, Hong Kong had 3% growth in its GDP. Then we were saying around July timeframe, well, that's looking more like 1.7. Now we're saying it might eke out 0.5. That's a technical recession. In fact, that's the first time Hong Kong slowed to that degree since the global financial crisis. And it could, like I say, go lower. It could flatline. Interestingly, though, and we have various economic models, which, by the way, have proven top-ranked consistently. We've beaten all the investment banks and other macroeconomic research houses for our accuracy in forecasting. Although I do find our latest forecast a bit perplexing. I just downloaded it. We just had it come out today, in fact. We're predicting over 2% growth for 2020. So that's actually expressing a kind of optimism that although it's going to really hit it, the skids, as it were, for this year, it's going to bounce back. I think that says something about the resilience of Hong Kong. And by the way, that's also with our analysts predicting that, technically speaking, it wouldn't be the PLA or People's Liberation Army, but the People's Armed Police. meaning that you will likely see them in the streets of Hong Kong. That's our analytical qualitative prediction. It's not part of these numbers here, but it would be backing that rebound. I myself don't think that's quite likely. I see more of a slow burn with the protests, but that's just my perspective. Those are our numbers, and then there's some other hard data there that we can measure looking back. This is official data. We know it for sure. The property values, a key component of all this. Interestingly enough, the surveys didn't talk about the lack of affordable housing. That's kind of a working assumption that what's really motivating a lot of the protesters is just dissatisfaction with quality of life in terms of economic mobility. In any case, down about a third in value just for July. August, it's expected the figures are actually going to be worse. But that's what we know for sure, recorded data. Stock market, the Hang Seng Index has taken a big hit. Interesting though, if you put it in context, it's not as bad. I've just got a graph there that shows compared to the S&P 500. And I don't know, talking to a communications group, if you follow these sorts of indexes, but that's the main measure for the U.S. market. It's also been going down. So the trade war affects not only Hong Kong and other Asian markets, but the U.S. as well. My point is just to say, take it in context. It's not the only market that's down. You can't just blame the protest for the sinking of the Hong Kong stock exchange. But anyway, it is down, obviously pointing to lack of investor confidence. And this is the other thing that is particularly noted in Hong Kong, because apart from the professional services and the capital markets, retail is a big part of what goes on. And in fact, mainland tourists have replaced the Europeans that used to flood in and snap up the deals they could get in Hong Kong. So a lot of high-end brands use Hong Kong as a platform really for all of Asia, but also as an access point into mainland China. The high-end sales are down nearly a quarter just for July. And that's before we had things like the closure of the Hong Kong airport in August. And this is a market where the retail segment relies heavily on Chinese, mainland Chinese tourists, and they represent 80% of inbound tourism, 78.3% to be exact, anyway, close to 80%, huge proportion, down about a quarter just for July. August, it's going to be even worse, we're assuming. And we're waiting for the official figures to come out from that. And this is just a slide pointing to the shutdown of Hong Kong International Airport. This is an airport that is not only important for, of course, Hong Kong and the rest of China, but indeed all of Asia and the world. The world's busiest air cargo terminal is Hong Kong International Airport. So to have that shut down for 2 days because of political unrest is unprecedented, certainly in Hong Kong, if not in the world. And I think this is an interesting reflection point. Imagine if LAX was occupied. How long would it take to send in the National Guard? Hong Kong, to its credit in this regard, and I think this is one of the reasons to be optimistic, the issue was solved with a court injunction. So there wasn't a real violent response or heavy-handed response from the authorities. There was a court order, and the protesters were gradually cleared out. So that's kind of the encouraging news. The less encouraging news is since then there was also this purge of Cathay Pacific, which is the flagship carrier. And basically, if you weren't towing the line, condemning the protest, and indeed, if you were an employee of the airline and you had in any way participated or sympathized with the protest, you got fired. So that's kind of the converse of this. But that's also something you could consider more of a corporate matter, a case of a company that's very tied to the mainland. In terms of rule of law, actually Hong Kong is still looking pretty good, as that example shows. And just a couple of slides to finish up with here. This is just regarding trade to point out, look, it's not just what's going on with protests that are affecting economies like Hong Kong and the mainland. There is this US-China trade war. We could have a whole nother discussion around that. Kind of the good news to the bad news with the downward shift going on in trade is that it's not as bad as you might assume. I just talked about these double-digit percentage, up to a quarter, 1/3 in various values and so forth. But trade itself in Hong Kong, our forecast at least, and this is based also on data that's available up until the first half of the year, about -3% for imports. That's also a reflection of that downshift with the retail, which uses a lot of imported goods to sell to the visitors from the mainland, and then about a 2% downshift for exports. That isn't a huge hit. I mean, that's, to paraphrase Monty Python, a flesh wound, right? It's not something too bad. Okay, and then here's some data that actually shows why this isn't as bad as it could be in greater perspective. One is if you look at longitudinal property prices, that's on the upper right there, those are still at a high. And basically you see this index, the Cinda City leading index, flatlined. So yeah, there's been this adjustment. That was a month-on-month adjustment. So you see a bit of a dip. But overall, these are astronomically high prices compared to a few years ago. So overall, the longitudinal movement is that you still have very high property prices. In fact, what you'd want to see and what the government's aiming for is a ratcheting down of that. They just want it to be gradual. You don't want it to drop off a cliff, but they really want to see those prices lower. Again, because that's an assumption of one of the key motivations for the protesters is just dissatisfaction with the lack of economic access, particularly centered on property. Property in Asia is the #1 asset class. People there use it like we think of stocks investments here in the US and in many Western economies. The Hong Kong dollar is stable. It was actually under more pressure back in March and May before the protests took off. So, and that was because of the trade war again. So if you actually look, there's been a lot of speculation about this flight of capital. People are moving their money out of Hong Kong. It's not reflected in the value of the currency. So that's good news. And then an interesting kind of beneath the surface movement has been with increased connectivity in the Hong Kong Stock Exchange with mainland stock exchanges. So all of the authorities in Beijing are vociferously condemning the protest. There seems to be this real hardening of attitudes about Hong Kong, even a speculation that the mainland will let Hong Kong just kind of wither away to stop bothering their other programs with the economy. Actually, there's been more and more linkage being built up. So we could have a whole nother discussion around that, but just to say that is actually taking place. And the main movement I associate with an example of that is that the mainland bourses are now considering, and that means once they've announced a consideration, it will happen, dual class listed shares. I won't bore you with the technical details if you're not into finance, but just to say that is a major step forward both for Hong Kong and the mainland, which is the real prize in what Hong Kong offers with its stock market. And a final slide just to leave you with, as I mentioned, if we had the sort of protest we saw in LAX, the kind of national armored, National Guard in this case, or military response that would have taken place, Hong Kong actually had that kind of a response take place about 2 generations ago, 1967, when the protests, curiously enough, were pro-China. This is when you had sympathizers with the Maoist Great Cultural Revolution, and there was also a considered similar instigating factor here, lack of economic opportunity, a lot of oppression with average workers going on under the colonial administration. That actually saw also a high number of deaths, some 50 deaths during the protest over the summer of 1967. One of the good pieces of news about the protest, regardless of one's opinions on what they're about and what they mean, so far no reported deaths, and hopefully that stays the case. But Hong Kong's been through much worse, is my point here, and indeed, under British colonial rule, there was a very strong armed response. So far we've just seen what's going on with the police, violent enough by modern standards, but not as bad as it's been before, and I think indeed it could be in other contexts. I'll leave you with that.